There was a time when I was actively looking for investments outside America. I was looking for global diversification, but that's not the case anymore. I'm not betting on any country in particular. I'm always betting on America. I'm always betting on the Western world. But there are investments in my portfolio that I have recently added, and the new investments I'm going to make in February of 2024 are outside America. Out of the three stocks I'm buying, they are in three different countries. One of them America, but the two others are outside America. And it's not that I was looking for these investments there. I was looking at the business. These businesses have good fundamentals, good management, they are undervalued, there is a margin of safety. Of course, when you're investing outside America, usually I take a bigger margin of safety. If I'm investing in the developing world, outside the Western world, the margin of safety will be even bigger because you have to take all of this into consideration: currency, political risk. But I'm not afraid to buy a good investment in any country as long as I'm getting it at a good price. The first stock I'm buying in February of 2024, this one, it's an American company. It's Booking Holdings. The main business of Booking Holdings, of course, is Booking.com. This is something I use every time I'm traveling. Most of the time, I'm going to book hotels on Booking Holdings, Booking.com, and it's one of my hobbies to travel, so I use it a lot. Whenever you understand a business that you use a lot, that's an advantage to you if you're going to look into the business. So Booking Holdings is more than just Booking.com, although this is the main business. What you have to do next is to look at all the competitors, and this is exactly what I did. I look at TripAdvisor, at Expedia, at Airbnb. Although Airbnb is growing faster than Booking Holdings, overall Booking Holdings have better fundamentals. The returns on invested capitals, returns on equity, margins, everything for Booking Holdings is better. In 2020, 2021, of course, the business was affected, but they have recovered, and now that travel is recovering, more and more people are going to use Booking Holdings. So over the long term, we can expect that the company will keep growing. Of course, if we have a recession, maybe in the short term, growth will slow down. Maybe they are going to have lower revenues, but we cannot predict recessions. What we are looking for is a company which is going to grow over the long term. There's another interesting thing about Booking Holdings is the fact that they are buying back so many shares. You look at the treasury stock, that is how much they have invested in buying back shares, how much cash they have returned to shareholders through buybacks. It is higher than retained earnings. So the company has effectively returned all its profits that it ever made to shareholders. They are able to do that because of the big cash flow generation. When you're buying back shares, you're using cash. But retained earnings, this is net income. So they are such an effective company that they can buy back shares. Of course, buying back shares is always good eventually for shareholders, especially if the shares are undervalued like right now. And that's why I'm investing in Booking Holdings. The second stock I'm buying in February of 2024 is a French company, La Française des Jeux. Let's just call it FDJ. FD. Okay, FDJ. We are going to call it FDJ. What is this company and why I bought it? If you look at the stock price in recent days, you will see it has been moving up. Why? Just the day I bought, of the 2 business days, the stock is up 6%. We are going to talk about that in a few minutes. First, let's understand the business. They have a Moat, gambling in France. So if French people want to buy the lottery, they go through this company. So they are operating, and they say that they have the Moat. They say that they have a monopoly. Earlier, the company was owned by the French government, but they decided to have an IPO. It's still 20% owned by the French government, but the rest is, of course, publicly traded. So they have a monopoly, they have a Moat. Nobody's going to come and try to disrupt this business. We have this consistency that over the long term, more people are going to buy lottery and they are going to make money. Of course, with such a business, growth is limited, but they are growing through online gaming, online betting, and online gaming. This is where the business can grow. They have recently made an acquisition on an Irish company, and they are trying to expand outside of France, which is good. When I calculated the intrinsic value of FDJ, I saw that it was undervalued. They had good margins, very efficient company, good management. So I invested in the company. It was undervalued. But then 2 business days later, the stock went up because of a new acquisition that they were going to make. So how did I get the news about this company making this acquisition? I saw that the stock price was up. I went on City Falcon, which is today's video sponsor. On City Falcon, you're able to look for specific news. I always tell you to avoid the noise in the market, and this is why I use City Falcon every day. Stock price of FDJ was up, so I type FDJ and it gives me everything I need to know about the company, what's happening. Maybe some analysts upgraded the stock, maybe they are making an acquisition, maybe it's something else. So everything you need to do, it's there. You have news from multiple sources and you can read the news. If you use the promo code Ishfaaq, you'll have 25% off any subscription of City Falcon. This is something I recommend because it's something I use every day. What was the news about FDJ? They were acquiring a Swedish company, Kindred. Kindred is in the online and gaming business, but operating in multiple European countries. They don't really have a moat like FDJ, but the fact that they are in the online and gaming business, they are growing very rapidly, faster than FDJ. In recent years, they were trying to get local licenses. They were operating in the Netherlands, for example. They ceased operations because they did not have a local license. They got the license and went back to the Netherlands. So, of course, this is going to affect their business temporarily. Before, they were not looking so much into licenses. In 2010, only 22% of the business were locally licensed, but now it's 85% and they are aiming for 100%. That's one reason why they are merging with FDJ. But because they have reduced their business, they have lowered their growth. When they get their licenses, if regulations come, they are going to be prioritized compared to a company, their competitor, which doesn't have a license. So it is a good thing to have a local license, but it is temporarily affecting the business. The stock price did not do so well, and FDJ saw that opportunity to make an acquisition of Kindred. And the acquisition price is about 2.6 billion US dollars, but when I calculate the intrinsic value of Kindred, it is worth 3.2 billion US dollars. So FDJ is actually making a profit from this investment, and the market understood this. That's why the stock price of both companies went up. And I invested more in FDJ. And finally, the third stock I'm buying in February of 2024, it's an Indian company. It's called Renewable. It is a renewable energy company. So let's understand how this industry works. The big utilities, they are not going to invest directly into renewable energies because they need to take a lot of debt to do that. It takes time, and utilities like to be the safe company. People invest in utilities because they know they are going to be paid dividends. So what those utilities do, they are going to create new companies. They are going to have IPOs with these companies, and then these companies are going to make the investments, are going to build the projects, the solar farms, the wind farms, and sell the energy through long-term contracts to the utilities. This is what is happening everywhere in the world. But in recent years, interest rates have been going up, and these companies, these more renewable companies with a lot of debt, they have been suffering. That's why you see the stock price of most renewable energy companies have been going down. But Renewable Energy Global, an Indian company, does not have so much debt. They actually have a good balance sheet compared to the competitors. The stock price went down because the whole sector went down. But if you're thinking about the long term, India is not a country with a lot of fossil fuel. They need renewable energy. They are growing faster than China. So if you're thinking about the next 20 years, of course, India will be producing more renewable energy. And this company is going to win from that. That's what I'm betting on. This is a very long-term investment. In the short term, the stock price is still going down. I'm not worried about it. I'm looking for the long term. So these are the three stocks I'm buying in February of 2024. Renewable Energy Global, Booking Holdings, and La Française des Jeux. I would recommend you watch this video about Booking Holdings where I go much into details about this company. Have a nice day and goodbye.